Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, September 9, 2024. We are looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, let's take it from the top, and then we're going to work down from there. There's a lot of stuff on the board. Let's date back to several days ago when we were talking about an Irene number. I had our Irene number around 552.60, give or take. Traders inside the live room, inside the numbers. We talked about it in here. Everybody kind of knew where we were sitting with that Irene situation. But then there was a secondary number. The market had to really give up a secondary number. We call it a gateway number. It was at 548.88. It's represented here by the blue horizontal line. Once they gave up 548.88, you could see what happened. There was somewhat of a waterfall or watershed decline. We'll get to that in a moment. Even on here, where you could see on the 4th and 5th of September, they tried to recapture what was that Irene number up at 552.60, give or take. They couldn't do that. They got below the gateway number, 548.88, and boom, Friday, she trades into where? You got it. Remember that trend line. You wonder why I kept those trend lines on the screen all this time since she broke above. Because of the fact, and this was always a fact, she was going to still come back to run another test of, or at least pay a visit to, of these trend lines. Where do these trend lines coincide from? Well, let's refresh our memory. They come from the high in 2000. That's March of 2000. This is over 24 years ago. And this one comes from the high in 2007, the financial crisis high, the dot-com bubble high. And they're connected to the recent highs. This high here in 2022, and you can see where it slices right through, once again being met last week. And you go back to the daily chart on Friday at that place. And what do we have now? A dead cat bounce off the trend line. Does anybody now dispute the trend line? Is anybody disputing the fact that these trend lines are still important after all these years? Is anybody surprised that they A, paid a visit back to the trend line, and B, pretty much stopped on another dime at the trend line? Post a comment under the video. Let's hear your thoughts about the trend line. Couple of things of note. We have a futures contract roll situation. Weird stuff happens around the roll. What do I mean by all this? If you're not familiar, we're going to now roll from the September expiration contract in the S&P and other market futures contracts to the DECE or Z contract, the December expiration contract. The December expiration contract is roughly, give or take, around 60 points higher than the current outgoing contract, which is the U or September contract. Let's see in real time what the heck I'm talking about. Here is the ES S&P E-mini futures contract, September expiration. You could see price up here, 54.82, give or take. And now, here is the December expiration contract, the DECE contract, and you can see up here, 55.40, roughly a 60-point, give or take, differential. Beware of the futures contract roll that's occurring several days from now. It's an ongoing situation, doesn't necessarily happen in one day. Traders can trade both contracts for a while. We're coming up to the midst of the contract roll period. What else we got in the S&P? Well, we have an inside day today. Friday was a big down day. Today is what's called an inside day. The high and low of today is a narrow ranging day in comparison to the Friday's day, the Friday's range, which was a much more expansive range, and thus we have an inside day. It's somewhat of an indecision day. It's a dead cat bounce. Eventually, you're going to get a dead cat bounce. What better place than the trend line? And here's what we can say. If you get above Friday's high, that's a uber bullish or an uber bullish signal. There'll be another leg higher to get above and stay above the 20-period moving average, or home base as I like to call it. Conversely, getting below Friday's low is going to open the door for the 100-period moving average and a gap down here around 533 and or lower. Inside the number members and live room members will certainly have those numbers on an as-needed basis if they are conducting another rug pull operation. We had a bit of a stealth bonanza today around the horn. Not only inside the numbers, the live trading room, but also the lazy swing trader automagical algo system. Real quick, we were in Monster Beverage from the lows made early August. We already had an exit at 49.45. That was our base hit. Today was another exit, a second profit target at $50.95. Happens to coincide with high of day. Funny how that works. Lazy swing trader automagical algo system. How does this work? We have a watch list. The watch list contains stocks that are coming close to numbers that are tradable opportunities, whether they are longs or shorts, support or resistance. This is an automagical algo system. Once a stock starts to get close enough to the tradable number, support or resistance, it shows up on the watch list. We have an open trade list. These are trades that already triggered, some of which have already achieved profit targets. They're trailing positions. Some are newly minted. Some are out of the money by a few percentage points, a couple, 3 percentage points. Some of them are nice trades in the making. We still have another exit on Monster. We have another exit on NTAP. One's long, one's short. Both are really nice trades that are still existing on the open trade list. Here's the closed trade list. These are trades that were on the watch list. They went to the alert list or the open trade list via an alert. How do you get an alert? You get an email and a text message when something on the watch list hits its entry objective. Goes on to the alert list. It's an open trade. Once it hits its profit target, you get another alert. It makes it over to the closed trade list, and you can see here's a current list of the closed trades. If we do have losses, which do happen, this is the trading business. This isn't perfect. It's using the 80-20 rule. However, our losses, the objective is, and the stop losses accordingly are designed to lose small and fast if we have to lose. If the trade isn't working, the setup changes, things change, we lose small and fast if we have to lose. We let our winners run and we lose small and fast, and that's the way you make money in the swing trading business. Lazy swing trader automagical algo system. But wait, there's more. Monster wasn't the only exit we had today, the only profit target hit today. There was another. How about United Airlines, UAL? Buy alert issued at October or August low, pardon me. Third and final profit target hit today. Obviously, if a trader wants to hold on to a trailing position, that's up to the individual trader. From a process and product standpoint, we're out of the trade. It's on the official close list in its entirety. 3 exits. Look at what this was, 26% gain from entry in what? How about 4 trading weeks? Lazy swing trader automagical algo system. But wait, there's more. Remember, we had what's called a stealth bonanza today. Now we move over to inside the numbers for the day trading folks, and we have some early commentary on the board. And we've identified an important number right out of the chute at 0 dark 30. For those of you home gamers, that's roughly 5:36 a.m. in the morning, Eastern Standard Time. 544.70 is an important number. You'll see that show up as a pivot. We're already talking about it ad nauseum in the early notes. So let's see what we have as the day starts to unfold. What's the scoop today? If they stay in the DCB or dead cat bounce mode, we're looking for the place they would get drawn into and find overhead resistance. That place at least begins at 544.70 and a resistance zone extends up to 545.75, where we would expect them to stop going in the northern direction and react back down in the other direction. That was on the board at 8:30 a.m. Eastern Standard Time. Right of the vertical is today's activity. Your bottom blue line is 544.70, the pivot, which is why is now green. 545.75 is the secondary or top end of that resistance zone. You can see they did spike that a little bit, however, did pull back from the resistance zone as prescribed in the pre-market notes. There was a lot of white space in here with the gap up, and we really didn't have any bona fide resistance until you got down near the closing print from Friday, or the gap as they say. However, they did do a garden variety retracement and did rip it back up. And what we did know, and you'll see later in the notes, is back above the pivot is the bull case for another rally attempt / leg higher. What I would urge you to do is pause the video, read the notes, and go back to the charts to double check the work. You see, no change to the resistance. This is still pre-market. Here's your zone. If above 545.75 on candle closes, not just a 5-minute candle, not just a peekaboo, but sustaining price above, the door would open for 547. Well, let's go see where 547 was. And I would suppose 547 was important to know for later. They actually went up and did the 547 when they breached the former high and got above and sustained price above 545.75 as prescribed. Look over here. Look closely at what happened. They get above, they come back for the retest, and then they go back up. Once above a number, it becomes support. Until above, it is resistance. That's the way this works. Pause the video, read the notes, go back to the chart to double check the work. As we get closer to the opening bell, the thieves in the morning are headed toward the front end of resistance and a magnetic target of 544.70. And you can see, this is a 5-minute chart. 1, 2, 3, 4, 5. 25 minutes right around the opening bell. It was magnetic. They stayed above pretty much, and that was a hint that they were going to move higher up to the top end of the resistance zone. Once they couldn't sustain price above there for more than a few minutes, they fell back down below the pivot. Opens the door, and you'll see this later in the notes, for another leg lower. It's a progression of events. It's how it's described, it's how it's taught, it's how it's traded in real time, in the live room, inside the numbers, all that stuff. Pause the video, read the notes, go back to the chart, and double check the work. It's all in here, everything a trader needs to be successful trading the S&P during the trading day. Whether you're trading exchange-traded products, options, futures, options on futures, micros, it doesn't make any difference. They're all directional trades. If you're making money in the live room, post a comment under the video. Tell traders what's going on. Are you learning? Are you progressing? Are you making money? Do you learn? Is it compounding in the live trading room each and every day? Pause the video. Read the notes. Study the charts. Double check the work. We had one stock on the move today. It didn't hit its entry objective, so it's off the board. It's a no trade. But wait, there is more. Remember the stealth bonanza situation. You know, we have these discussions in the live room. We're looking at charts, regardless of what's available from a stocks on the move perspective in the pre-market. We're looking at charts all morning long. What's moving? Can we find an opportunity? What's in play, so to speak? Apple was in play today. Apple had a number at 217.25. That was a today's number, live room special. And what happened? They had a nice bounce a couple of times. Another bite at the apple. They did a play it again Sam at 217.25. Nice $4 plus bounce 2 times off 217.25. How you doing? How about Google? Not quite the bounce from Apple, but Google nonetheless was a base hit. What was today's number? 148.65. They hit it, they bounced, they came back to it, got below, rallied back to it. That's indicative of today's number. They don't always give you a rocket ride from today's number, but today's number should be, as they say in the trading parlance, an attractant. So in the live room, we had a short spider trade. We had anybody that wanted to be long over the pivot trade. We had a Google trade. We had an Apple trade. We had a lazy swing trader automagical algo system. 2 profit targets hit today. That's why it was a stealth bonanza. Do we have any confirmation from our friends over in Camp IWM? Well, we had an inside day very similar to the spiders, but we had what's called relative weakness in the trading parlance, up less than 0.3% in Camp IWM against 1% plus up day in the S&P. Of note, puzzle piece on the table. They're hovering over the 100-period moving average. From here, we don't know whether they'll just go sideways and put in some kind of a bearish, flaggish situation, or will they make an attempt to bounce back up and run a test of the most recent breakdown candle high, which incidentally coincides with the moving averages in the 20 and 50 period. I wouldn't say they're converging, but they're right on top of each other, right above 212 in the IWM. This is what we're looking at. What about the folks down at the transportation department? Well, we did have a touch, but it's still a touch of relative strength, a little bit up more than the S&P on percentage terms in the transports, or the folks down at the transportation department. We know who they are. They're Buttigieg's crew. Closed another week back below or inside of that triangle situation. When they're out of time, they're out of time. But at any point in time, we know that they can break upward out of this triangle or downward below this triangle. Right now, they're inside this triangle. Right now, being supported by the 20 and 50 period moving averages, above all the moving averages. And what? You got it. The trend is your friend. Weekly chart best. What about the Q people? How about an inside day for the Q people? Big down day on Friday, like all the rest, and an inside day for the Q people. Where did they go for 48.55? I think we discussed this either in here, in the live room, or both. I'm sure it was in here. Otherwise, it wouldn't be on this chart. Funny how that was the stopping point on Friday. We'll issue that a funny how that works. Above Friday's high and the 100 period moving average, bull case. Below Friday's low, case for the 200 period moving average and lower. 435 will be a big place. Might want to write that down, put it on a sticky note. 435. About the XLF, the financials came in to run a test of the 20 period moving average on Friday. Basically, we'll call it a hit, even though they might have come up a few pennies short. We'll call it a legitimate test of the 20 period moving average. Bounced off of it in the dead cat bounce format today. Above all the moving averages, trend is your friend. Is there anything materially wrong with the financials? No. Can they eat time off the clock, build energy to make another move higher? Yes. Can they also, we are the umpire calling balls and strikes, can they also come down to test the 20 period moving average on the weekly chart? And the answer, of course, is of course they can. We do not know which one will occur. What we do know is below Friday's low, and the door will slowly open, and it could rapidly open as well, for that weekly chart 20 period moving average. Use Friday's low as a bogey. Smashmouth, Philadelphia Semiconductor Index, fighting the last moving average line of defense, the 200 period moving average, which is precisely where the dead cat bounce took us today. Below Friday's low, and it's going to open the door for the lows from the beginning of October. Smashmouth, the semis are in a different position than many and most other charts. They are a good proxy for the tech space. Heed the semi chart. Puzzle piece on the table. Below Friday's low, bear case. Above Friday's high, bull case for a further bounce. First stop and objective would then become 230. Sticky note material, write it down. Heed the semi-space. Have I told you how much I appreciate each and every one of you? Without you, These videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.